talk about your other business, which is the non-lodging business. So you are one of the best known and one of the best real estate investors in our country. Right now, many people think the real estate market is going to be in trouble because high interest rates are making it more and more difficult for people to service their loans, and we're going to have a lot of defaults soon. What do you think about that observation?
Anything with a fixed income stream is worth less when rates rise. And the underlying fundamentals in most of the asset classes in real estate are okay right now in the United States. The apartment market, the industrial logistics market, the hotel markets, those are all in good shape. But there's no question that the Fed has reacted dramatically to try to slow the economy down quite late, obviously. And that has impacted real estate values. Yields on properties are moving up to reflect this higher interest rate, and the supply of credit to the industry is curtailed dramatically. So I like to say it's a hurricane over real estate right now. We're in the Category 5 hurricane, and it's sort of a black cloud hovering over the entire industry until we get some relief or some understanding of what the Fed's going to do over the longer term.
Have you ever thought about what your real estate assets might be affected by the impending real estate hurricane? Are your investments safe from the weather, or should you brace yourself for volatility? Come explore the perspectives of industry leaders like Barry Sternlicht and learn about the possible storm clouds forming in the real estate market by watching today's films. Together, let's dive right in. But before that, just subscribe to our channel and hit the bell icon. Don't forget to like and share the video. There's a hurricane forming in the real estate market. According to one of the most renowned and successful real estate investors in the world, billionaire Barry Sternlicht is the chairman, CEO, and co-founder of Starwood Capital Group, an investment group that manages more than $120 billion in assets. Being CEO of Starwood, one of the biggest real estate companies globally, allows Sternlicht to have a first-hand understanding of industry trends. One of the real estate industry's leading lights, Barry Sternlicht, recently expressed fears about an approaching hurricane in the real estate market.
We're in the Category 5 hurricane, and it's sort of a black cloud hovering over the entire industry until we get some relief or some understanding of what the Fed's going to do over the longer term.
The CEO of the international real estate investment company Starwood Capital Group, Sternlicht, is known for his astute observations of market trends. We shall examine Sternlicht's viewpoint on the impending storm in the real estate market in this examination. You must first comprehend the connection between interest rates and real estate values in order to fully comprehend what is happening in the real estate market. One asset with what is known as a fixed income stream is real estate. An annual quantity of money that is largely predictable is called a fixed income stream. If you own an office block and your tenant has a 10-year lease, you are aware of the amount of money you should receive over the ensuing 10 years. Real estate generates a fixed income stream in the form of these locked-in cash flows. When Sternlicht stated that the value of any asset with a fixed income stream declines when interest rates rise. Here, we will share a few of points that are highlighted by Barry.
Anything with a fixed income stream is worth less when rates rise.
Rising interest rates. Sternlicht's analogy of a hurricane hitting the real estate market suggests a significant and widespread impact. One key factor he highlights is the rising interest rates. As central banks respond to economic conditions by adjusting interest rates, the real estate market becomes sensitive to these changes. Higher interest rates can lead to increased borrowing costs, potentially slowing down property transactions and affecting property values. Paradigm shift to remote work. Sternlicht cites the COVID-19 pandemic's aftermath as another cause that is adding to the impending storm. A paradigm shift in work culture was brought forth by the epidemic, with remote work becoming increasingly common. This change has caused the value of actual office space to be reevaluated, which could result in a decline in the market for commercial real estate. Inflation. Sternlicht also raises worries on inflation and how it affects the housing market. Inflation can reduce the purchasing power of money, increasing the cost of building and maintaining real estate. Consequently, this might have an impact on rental yields and property values, which would reduce the appeal of real estate investments. Affecting homebuyers and sellers. Sternlicht's storm alerts do not exempt the residential real estate market. He makes the argument that the recent surge in property prices might not last. Rising interest rates and issues with affordability could cause the residential market to slow down, which would have an impact on both buyers and sellers. High construction cost. Disruptions to the supply chain and rising construction prices are also mentioned as possible storm clouds brewing over the real estate sector. These difficulties might prevent new construction and make the housing shortage that already exists in some areas worse, which would increase pressure on prices. Disturbance in global economy. Sternlicht has concerns about the state of the world economy as a whole. Unpredictable occurrences, trade uncertainty, and geopolitical conflicts can all contribute to an unpredictable climate that undermines investor confidence. Because the situation of the global economy and the real estate market are interconnected, any disruptions in either could intensify Sternlicht's metaphorical cyclone. It's important to remember that real estate markets are fundamentally cyclical despite the dire warnings. Corrections frequently occur after periods of progress and vice versa. It is important to consider Sternlicht's prediction in light of more general economic trends and data. Adopt strategies. Investors and industry stakeholders may need to take strategic action in reaction to the impending storm. To weather the storm, real estate portfolios must be diversified, comprehensive risk assessments must be performed, and market dynamics must be kept up to date. Furthermore, taking proactive steps to lessen the impact of impending issues can include embracing technological improvements and adjusting to shifting consumer preferences. In conclusion, the real estate hurricane emphasized the severity of Barry's problems, while simultaneously emphasizing his room for development. Similar to nature, real estate went through cycles of destruction and regrowth. The approaching storm was a warning that navigating unknown seas, being flexible, and having foresight were necessary for success in the realm of high-stakes investing. Barry was at the helm of his real estate business, a captain determined to lead his ship through the storm. As the first gusts of the financial hurricane raced through the markets, the wealthy investor faced an uncertain voyage ahead of him, but he was well prepared with tenacity, creativity, and lifelong experience negotiating the nuances of the real estate market. Barry Sternlicht's comparison of the real estate market to a hurricane as it approaches serves as a sobering reminder of how intricate and dynamic this sector is as the cyclone approaches. The real estate market is in reality going through a time of uncertainty as interest rates increase, workplace cultures change, and outside forces become more significant. Nonetheless, investors and industry participants may weather the storm and emerge robust in the face of difficulties with strategic preparation and flexibility.